And the $500 trillion of assets are sitting in real estate and currency and sovereign bonds and corporate bonds and artwork and equity. And they're invested in the stock of a company in Africa that's going bankrupt, right? They're invested in real estate in Cuba, in Venezuela, in Nigeria. They're sitting in a warehouse that's crumbling. It's got a 40-year life. And so entropy and inflation, you invested $100 billion in a war zone, and then a war broke out and your money got your asset got devalued. All of the things going on in the world, the war, the chaos, the competition, the inflation, the entropy, the passage of time, the hurricane, the COVID, vaccine, the COVID virus, all of these things impaired the value of your assets. The reason Bitcoin is going up, it's not an accident. It's because capital is economic mass. It is flowing from a high energy state, the mountaintop, to a lower energy state, to a more efficient state. It is steam condensing to water, condensing to ice, giving off energy, just like in any chemistry lab, you would learn this. And at the same time, there's this volatility driver, Tom, which is you have an open capital market. And on Saturday night, when there's a missile crisis, someone can make a $10 billion short bet, levered up 100 to 1 and panic. And they can do it in Bitcoin. And then on Sunday morning, when the missile crisis has passed and nuclear war did not break out, they can go long and they can reverse the trade. And Bitcoin's the only asset where you can sell $1 billion of it in a minute at 100 to 1 leverage, and you can buy $1 billion back in a minute with 100 to 1 leverage on Saturday night and Sunday morning. If you could do that with your Upper East Side apartment, then property values in the Upper East Side would also be more volatile. And if you could do it with Picasso's, that would be more volatile. Because if people get drunk and they panic and they short your asset 100 to 1 and change their mind 6 hours later when they get up with the hangover, you're going to have volatility. So the volatility is a feature. It's not a bug. It's because it's the most useful thing in the world from a capital market point of view. And if it is that useful, then a Bloomberg jockey in Singapore is going to raise $20 billion in capital, and they're going to make it available for you to trade on Saturday night, or they're going to make $10 billion of credit available to you on Sunday morning because they're getting paid an obscene fee to do it. And once you understand the asset's appreciating because it is thermodynamically sound and it represents